Beautiful.
All right. So Julian, thanks for joining me today.
Kevin, how you doing?
Good. Things to talk about today. I think maybe the easiest thing to do is kind of take a look at what you're seeing in the market right now, what your experience has been like this year. I just want to compare it and see if you're seeing the same things as I do or if you see things differently.
Yeah, what we're seeing in the market, that's a really wide one. Do you mean specifically from like a realtor's, like from my point of view, or do you mean like in terms of just general activity or just all of it?
I mean, we can talk about anything, right? We can talk about it from the perspective of
Okay.
how realtors see, the market right now, or you can talk about even how, you as the team lead has been managing the team this year and what you're seeing with the team. I mean, I'm open to go with it wherever.
Yeah. So the market, I mean, it's been a lot better than it was before, obviously. The market was awful, I'd say, in 2023. In terms of just generally, buyers were crippled by general, economic paralysis. So compared to then, things are really good right now. I think the fact that the rates have been dropping and there's promise of further drops has been severely positive just for bringing people up, giving them some hope from a client's point of view, also from a realtor's point of view as well, actually. So I think because we've just had these drops, we've got another drop coming, October 23rd? Another one after that, potentially in December, or at least we're thinking there's going to be drops. I think that it's been pretty good. And I think because people are thinking the prices are going to go up after those rates have dropped, we're seeing a lot more activity on our website from our marketing, and our agents are getting more calls. They're getting referrals because people are like, well, this happened a couple of years ago when as the rates dropped, the prices went up. So we better try and beat that. I think people have gotten a bit smarter. So yeah, market in general has been pretty good. We just had August was, as a team, was our best month yet. We had 21 sales, which was incredible. I'm so proud of the team. We needed it too, though. Just in general, we needed that as well. So yeah, a lot of positivity. And I think there's a lot of stimulation overall, and we're going to see some good stuff coming.
Yeah, I mean, I think I actually sat down with Eric, our mortgage broker,
mortgage shop,
last week, yeah. And we're talking about a lot of the positivity with rates and stuff. But one thing that I was concerned about, that I was asking him about, because I see a lot of positivity. I mean, last year being the lowest sales volume that Ottawa saw in the last 10 years. But also just looking at the rental market, right? How crazy the rental market is right now, right?
Yeah.
We're getting bidding wars on rentals. We're having people that are making a couple $100,000 a year, renting, when
Great.
they have no business renting, essentially, right? They'd be buying in any other market, but the interest rates and the uncertainty in the market has kind of pushed them to where they're thinking of renting, right? And then now we look at all the positivity of the rates coming down and getting more affordability, right? And so everything is poising us to look like the market's going to make a pretty strong comeback next year. The one thing that I'm concerned about, though, is with all the renewals coming up, right? So all the people who
Yes.
Are up for renewal. I think we have 80% of the country up for renewal in the next couple of years here, and so a lot of these people who were either on fixed terms where they're going to be renewing it double, or they were on a variable term, in which case that their amortization got longer and they are essentially not paying their homes down, having to come in. And so I think we had some big news this week that definitely eases a lot of my concerns on that, right? I'm not sure if you saw that, but
You're talking about the 30-year amortization?
No. So just yesterday we had the banks come out and say, if you are looking to refinance and switch lenders, you no longer have to qualify with the stress test, right?
I see that.
So that's huge right now, right? For everyone who's looking at renewing, because right now how the banks work it is the banks, you're already locked in. So when you want to renew the mortgage with your bank, you just sign on the dotted line, right? And so right now they don't have to be competitive with their rates. So a lot of the times right now is the banks are not offering their clients some of the best rates because they don't have the option of switching. And now with this new regulation is they're able to basically switch and go where the cheaper rate is and be able to qualify. Because right now, up until now, if you wanted to switch rates, the rate might be 0.5% cheaper elsewhere, but you have to qualify for 2% above that. And if you don't qualify, you're stuck at the bank, right? So
Yeah.
I think it's a lot of positivity where the banks are now going to have to get more competitive because they're essentially don't have a monopoly over these clients anymore. And another big thing that people should be considering too, like when they're switching this, why it's positive is we are seeing the rates change right now, right? And I mean, this is something that you should talk to a mortgage specialist about. I'm definitely not, fully qualified to talk about, but from my understanding right now is that when we're looking at the fixed terms, the banks are making it a lot tougher. The penalties are a lot higher to cancel a fixed rate than some of these monoline are, and they calculate it differently. And actually, we went through it today on our team call where Eric brought us through it, and basically looking at how the banks are calculating the penalty and how the monolines are doing it, and it's massively different, right? So a lot of people right now when they're
monolines is cheaper, less of a penalty.
Yeah.
To break a fix with it. Oh,
Yeah,
really? I didn't
yeah,
know that.
it's massively different. So we looked at an example today where with the bank, if you were canceling with 3 years left, you'd be looking at like 27K, and with the monoline it was 9K. And obviously,
Wow.
like the diagram has to be gone through the numbers and show how that works. But I think that's a big thing that people want to be looking at when they are looking at renewing. Because right now, if you're renewing a fixed term, but the rate goes down, another 2% in the next couple of years, and then you look at, okay, well, I want to break this term because I want to go with the cheaper rate. A lot of these banks right now are having higher penalties, so that doesn't make sense. It doesn't make financial sense for you to break it. So that's the one thing that I think people should look at for sure when they're looking at renewing, is looking at the terms if they were to cancel too. Because like up until this point, it hasn't been something to talk about because the only people who are really canceling, their fixed rate terms are people who are going through a separation or some other unfortunate scenario in their life, right? Whereas now, with the rates dropping, it's going to be a lot of people that are going to want to cancel their mortgage and lock in the cheaper rate that they're missing out on, right? So that was one interesting thing that I learned today. But yeah, I mean, I think for the most part, yeah, if we're fixing it now, we're making it better for people to now renew their mortgages and make it more affordable for them.
Yeah.
Then we're gonna have less people financially strained needing to sell, and if the inventory doesn't like jump up, like that was the one thing that I saw as potentially increasing a bunch of inventory in the next couple of years, is people who can't keep their homes. But if they're able to keep their homes, we still have a extreme housing shortage, and with interest rates being more affordable and people basically paying $2,600 to rent a townhome in the suburbs,
If you're lucky.
yeah, why wouldn't, and missing out on 10 different offers on that same property, like why would they not buy, right? And when we see a bunch of people come back to the market, what is going to happen to the market? I think it can only go one way, right?
Yeah, man, they're changing a lot of stuff with the mortgages. I literally was just on the phone with a mortgage broker that I don't really know him well. He's out of Toronto, and I'm not sure how my client met him. And probably this would be the last transaction that we do together. But even if it's not, I will say he didn't know about the new rule change with the 30-year amortization. He didn't know that it's now open to anyone. So it's not just you have to have 20% down to hit that 30-year amortization. Actually, anyone can qualify for the 30-year am if you're under 20%. And the fact that he didn't know that, and this guy, as far as I know, does a lot of business, he knew that obviously you could do it. I've discussed this before. I think you have two. You could do it on new builds. The fact that he didn't know that is, yeah, of course, like it's concerning when he's working with your client, but I'm not really focusing on that. More just shows me that there's opportunity right now. There's been so many federal rule changes and so many changes to the lending legislation that even brokers can't keep up. And so there's windows there of opportunity for our consumers, for our buyers, to get in there. You know, if you are well advised and you're listening to podcasts like this and you have information that maybe the other buyers that you're competing against, because we are seeing multiple offers again, that they don't know, you're in a position where you can go a little bit higher before everyone, like the herd, catches up and sees, oh wow, so this essentially makes me qualify for $50,000 higher than my last pre-approval within the last 120 days. So now I can actually go higher in price. If you're the one that knows that and no one else knows that yet, your mortgage broker doesn't even know that yet, you can go in and you can have a bit more of a competitive edge. So we're going to see, it's just another reason I think we're going to see a lot of positivity in the market.
Yeah, I think, well, one thing, the caveat to what you're saying is that that doesn't click in until December, right?
Yeah.
So that's one thing. If anyone's watching this right now, it is a great rule change, but no, if you buy a house right now, that you won't be qualifying for that. But it's something that if you're, if your closing is later, that you wouldn't be able to lock in today. But if you have a good broker, that they could, rejig your mortgage after the rule change.
Yeah, good point. And thanks for catching that. I just do want to clarify. It's December 15th is when you can actually, or your mortgage broker will be able to take your application to apply. It doesn't mean that you could close on December 15th or even December 16th, because that application still has to go in. So to be clear, the rule change takes action, then you can apply from December 15th or the day after from then on. So yeah, thanks for clarifying that.
Yeah, but the thing is, that's why I'm so happy that we have this space now where we can literally just get together. And I'm happy that it's not scripted, right? Me and you just sat down, like, what are we going to talk about? But the thing is, I'd love to pick your brain, anyone who's doing a couple hundred sales a year is going to have some good insight on the market. And, often I'm the one telling people about it, right? And if I'm always the one talking, I need to be the one listening. That's why I'm like sitting here kind of to hear what you see with what's going on, right? I mean, it's great too. Like, I mean, everything's different too. It's relative, right? Because like for us, August was slow. I think the truth is, majority of realtors, August was slow. So the fact that you guys had your biggest month in August it's like, it's inspiring and it's great to see. But it goes to show,
it's odd.
Like there's always opportunity, right? And I think you hit the nail on the head too when you're saying, if you know this information before everyone else, right? And that's the biggest thing that people need to get out there, is because it's right now, the numbers are declining because we're seeing less sales. So prices are coming down cyclically, not like for the long term, but the short term they are. But most people's approval have just jumped up, right? Because of the fact the interest rates have come down. The average person is now qualified for, maybe 50,000 more on the average price point, right? We did the numbers last week. But then if we have this new introduction coming in December where you're going to get another 50K of approval because you can amortize it longer, right? Then, for you to jump in that, because by the time everyone's talking about this in the news, right? By the time everybody's talking about, the time everyone realizes it, everyone's in the market, and now you're paying that 100K more, right? That 100K and it's the difference between owning a house or not, right? Like, it is so tough for people to get in the market right now. But if you were approved for 500 and now you're approved for 6, that's the difference of owning a home or not. Even if you were approved for 600 and now you're at 7, that's the difference between just owning a home and owning a really nice home, because like there's a big buffer there, right? Like I'm looking at homes right now, and it's like, if you say we look at like townhomes in the suburbs, right? Like anything 6 to 650 is just like people are fighting over. But then anything above 650, like, I mean, it could have it could have 100K more in upgrades, and it's not sitting. I mean, it's not selling at the same point, right? Because it's just people don't have that approval, right? So if you're able to boost your approval and take advantage of that, you can get a much better home for not much more, right?
The problem is that at that point, though, like you just mentioned, then those prices are going up because of herd mentality. So the prices are generally just jumping up in total. So what cost $650 before may now cost $700, which is a good segue into a question I had for you, which is, and I mean, there's no way to know this, but do you think that we will ever get back to prices in 2022? And if people know what I'm talking
100%.
about, 2022, I mean, obviously at some point we will, but I'm talking like soon. If people don't know what I'm talking about, 2022 was the height of prices. I think pretty much anywhere, definitely in the Western world, probably even globally, but I don't focus on global. But January, February, March was like the height of prices, specifically in our market. So do you think soon we'll get back there? Do you think? Yeah. Okay.
100%. So for me, what I'm seeing right now is like, that's actually part of the reason I'm kind of articulating, because what I've just said, I actually just said on a previous video with Eric, and not to repeat myself, but it's like hitting them on the head, because I see the residential market right now, like people looking for single family homes, and by that I mean like condos, townhomes, like I mean all types of homes when you're looking for yourself as a family as opposed to an investment property. I see a lot of that right now is it's not as active. We see a lot of them sitting there, but now I'm seeing a lot of investors come back, because the investors are the ones running the numbers and seeing, oh wow, this makes sense. Because what else controls, supply and demand controls the market, right? But then look at what's happening to rent, right? Look how much rent has increased. Like rent right now.
Do you know the numbers? Do you know the percentage-wise what's jumped in the last year?
I don't, but and so I'm going to talk
it's like 15% in some places, something. Okay. Yeah, just so everyone.
So if you know, so 15%
it's gonna vary,
in what?
It's as high as 15%
in the past year.
In the last 18 months, something like that. Don't hold me to that, guys, but it was somewhere around. It was some staggering number, like 15% in last year and a half.
Because that's what I was going to compare it to without knowing the actual numbers, which obviously I should do.
It's dangerous to say the actual numbers, though.
But I was comparing it to, I think what's happened in the rental market in the last 2 years would be similar to what happened in the resale market between 2020 and 2022, right? When the interest rates were at its lowest, and we're in that's me ballparking and not looking directly, but that's what it feels like to me, because we're having, it's as hard to get a high demand rental property right now as it was to get a house in the heat of that, right? And that's where I see, when you're asking me if I think prices are coming up, but that's what I'm looking at. I'm seeing the rental market is high. The investors are coming back. They're seeing the long term, right? We still have major housing shortage. I mean, all the announcements from the government of all the homes they were going to build, they haven't been built. Yeah. Right? The cost of building is still astronomical. You even still with the home prices, yes, they were the highest in 2022, but they're the highest today than they've been every other year, right? 2022 is the outlier, but today we're more than last year. Last year we were more than 2021 and 2020 and so forth and so forth, right? So we still come up every year, except for when people were getting interest rates under 2%, right?
Yeah.
And that's when we look at the rental market that keeps going up. We look at interest rates coming down. We looked at the fact that the actual inventory and the amount of homes available has not increased, and it's actually become, even right now, so I skipped over my point.
That's okay.
But right now, in 2024, us being the highest, sale price ever, except for 2022. But even let's say 2022. Let's say 2022 at the highest peak.
Yeah.
Right now, you can't build homes for what the homes a couple of years old are reselling for, right? A lot of people, the cost to build is so high, right? So it's
people are
you can't replace it. Yeah, we can't replace them. There's no other.
And that's what's driving the rental market, like you just said. And I think a lot of people are seeing that. The rental market, exactly like you just said, it turned from that craziness in the sales market as those rates went up, and it beat people out of the purchasing market. Well, they need a house for whatever reason. Maybe their landlord's selling their property, or whatever reason. Maybe they're new to the country. They need a rental. And we've brought in over 3 million people in the last 2 years or something like that, or maybe it's even less time. So what that does is it just further dilutes the housing market, the rental pool. And if you can't qualify for a mortgage because there's too much red tape, let's say, then you're obviously going to that rental market. And we're seeing, we have quite a few rentals up right now, and we're seeing staggering prices. Prices that we've never seen here in Ottawa. $2,800 for townhomes, $3,700 to almost $4,000 for single family homes. So people are now facing that exact same problem that they were in 2022, or sorry, recently 2023, to even buy a house, but in the rental side, just to get housing. So I think as those rates are coming down, people are going to look now back. It's like a wave effect. People are now going to look back, okay, well, maybe purchasing isn't so bad. And you touched on it earlier, how people are usually delayed in knowing this information. I think it works in like quarterly segments. I think buyers are usually ahead of it a bit more than sellers because they're actively trying to find loopholes of what's the best investment for them. But people are generally about 3 months as a herd mentality, about 3 months behind on information that's given. And so, because I've had people, while rental rates or rental prices were going crazy, people are asking me like, are rental prices high right now? And I'm like, yeah, like look around. Like it's absolutely crazy. We were getting, 20 applications, 20 offers on a single townhouse to rent, which is good if you're the person as the investor that bought that property, let's say 10 plus years ago. But even on the flip side, those landlords, they had to go to that higher rent. They had to charge that $2,800 on a townhouse, and it still wasn't even covering their expenses because maybe they were locked in on or not locked in, but they had gone in on a variable mortgage when they purchased that investment property. And so, you've got everyone's kind of hurting. You've got tenants that are saying, well, like the price is so high. Meanwhile, the landlord, that's not even, maybe it's covering their mortgage, but what about property tax? What about insurance? What about damage to the property? What about hiring a real estate agent to help them navigate and get a good tenant? So it's been really tough. Generally, people are hurting on every side of it. And so I think this is severely positive that those rates are coming down. I have a question for you though, man. Do you think, this is severely generalized, do you think it's too little, too late? And I've heard several times before, like when the BOC starts to drop rates, they do it right to the tipping point, and that's when they decide to bring those rates down. Do you think it's too late, or like too little, too late, or do you think maybe they've learned from their past mistakes and now they're trying to do this to prevent severe problems from happening?
Well, I mean, that's definitely a question that like I'm not as qualified to answer, right? Because there's so many things that go into, like we in the real estate world are focusing on homes and housing, right? But there's so much else that goes into, the inflation and the affordability of living, and that comes to a part of, what they're doing with overnight rates and all that type of stuff. But
I guess a better question is like, what are you seeing in terms of, are you getting phone calls from people that are in dire straits, like people that are in positions where they need to sell due to their mortgage being upside down?
So
how do you deal with that?
Yeah, so that's something that we have been seeing, and it's a reality, and it's something that I wasn't sure because we just do a lot more sales these days, right? So I was wondering, okay, like just the fact that we're doing, hundreds of sales, are we just seeing more, instances of people in financial issues, right? But no, I'm seeing a little bit more, right? But it's not just the mortgage, right? It's living, right? So everyone that we've encountered more recently, right, where they are not paying their mortgage and they have to let it go. I mean, these people have all gained serious equity in their home, right? But they have all taken on outside debt, right? So they've been living off credit cards while accumulating the mortgage until the point where they've consolidated the debt into a second mortgage, or they're just dealing with that. So, and it's a really difficult thing because it's tough, right? Where we can sell these people's homes for $100K more than they bought them for, but because they've accumulated the debt, because they have delinquency payments and the interest rates and all that type of stuff, that's where people are getting into trouble, right? But aside from people who are managing their expenses and all that type of stuff, it's even with the mortgage rates so high, most people have serious equity in their home, right? And then I think that's where when your rates are coming down again, and I'm not trying to advocate just pouring on more debt, right? But the thing is, that is the ability, that debt can be leveraged, right? So when someone has been surviving the last 3 years, or I guess 2 years, the last 2 years of high rates, and now they are getting kind of in a tougher position, these rules like being able to remortgage, without the stress test, or possibly, so basically when someone's able to remortgage without the stress test, they have to keep their amortization in the same years. So if they have 20 years left on the mortgage, they can transfer 20 years left, right?
Correct. Okay.
But at the same time, if you can qualify the stress test and you need to alleviate your payments, like these people can now refinance at the 30-year amortization, right? So obviously it extends their debt, but if it gives them the ability to continue to pay down their home and build equity over time, like there's not many, like we said, right now the home prices are above every year but 2022. So only people who bought, and we're 2022, we're talking about between February and April, right?
Yeah.
Like there's 3 months of 2022 when we're talking about the high prices. Right now, the prices are above every single time except for three
Those
months
3 months,
in
yeah.
2022. So, when we're looking at people who are kind of in financial situations, right? It's like people in Ottawa too, a little bit more conservative, right? Where they're not leveraging as much as a whole. Obviously, you have people
Compared
everything.
to where like Toronto,
Montreal,
Montreal,
like a lot of people are taking on crazy car debt there. Like it's a known thing.
They're driving
Yeah.
a brand new Mercedes with no money in the bank, and here
Yeah.
you got people driving a Toyota Tercel with 200,000 in the bank. Yeah,
100%.
crazy.
But so it's like when you have equity in your home, are you going to choose to lose that equity to take on other debt, or are you going to choose to not go out to eat, or not make, not upgrade your car, or whatever it is, right, to save that house? Because it's ultimately, even if people are struggling to make the payments, they have equity that can be leveraged, right? So I think when I look at that, like, that's what also too, it's like we look at, I truly do look at kind of the negative aspects too. Like that was my concern, is because I am seeing some people in financial issues, and I do know that, a lot of people have to remortgage, and that's going to drastically change a lot of people, right? And a lot of people are going to get slammed, right? Like that's the reality. Even with these extra changes where, you can qualify so you can shop a better rate, or you can amortize longer again. Some people are going to get slammed, but they also have tons of equity in their homes.
Yeah.
They have tons of equity in their homes. So, they can remortgage and keep that home. And where it's like your other option would be to, lose the home and then go pay $2,700 for a townhouse to rent, right? Like it doesn't make sense. Like if you're not going to be able to afford your mortgage payments, you're not going to be able to afford a rental either, right? So it's like the lesser of two evils, and one's going to gain you equity because the home prices are going up, right?
So essentially lose some severely inflated equity in your property, but and it already was inflated so quickly since 2022 anyway, as opposed to losing your house. That way you're not going to lose your home. You might lose a little bit of equity that you think you had, but you won't lose your house, essentially.
Exactly, yeah. I mean, like, that's what it is. It's some people, basically some people for the last couple of years, because of how their mortgages have been set up, they've essentially been renting their own homes, right? Like their payments have been going to 100% interest. Not 100%, but like pretty close, right?
Yeah.
So, but the thing is, you're still better off because you have the equity built, and when rates come down, you will be paying, more off of your home, right? But that's to say too, it's home ownership. You also have costs, right? So if something breaks in your house, you got to come up with it, and that's, I think, that's really where I've seen people get into trouble too. It's not just that they've been accumulating out of debt, but they've been allowing their house to depreciate as well, right? In much worse condition currently than when they got it, and that's where lies the issue, right? But
yeah, you run into a tough spot when you're doing that. There's a property that I sold back in 2017, townhouse, and was just gorgeous at the time. And the family that I sold it to, let's just say they moved in more people than they probably should have, and there were 7 people living in this house. So this is a 2-bedroom, 3-bath townhouse, and the wear and tear in this property was just absolutely crazy. And then they were put in a position where they had to sell because they were moving to another country. And I go in and I'm like, this is honestly, like, one, it's probably not the time to sell. This was last year. And also, you've done so much damage that we got to figure out a way. It was very tough. We have to figure out a way to essentially bring this back to, if we can, if we're lucky, to the status in which you bought it in. And so we shopped around. We got really lucky on this. We found a painting team that would do it at, I think it was like $3,500 cash in on the property, painted the ceilings, the trim, cleaned up the floors. There were certain things like nicks and knacks that we couldn't actually fix permanently, but painted the entire house top to bottom. We got cleaners in there. I even helped fund the whole portion of it, which was incredibly essential as they didn't have the money to do it. And then luckily, this specific property, they had increased in enough equity that it covered, and I think they even ended up making like $8,000 above and beyond. So it's a really good point you're touching on. It's like, if just always, if you can, even if you're busy, everyone's busy, try to maintain your property. Like, try to at least keep it from depreciating, because you don't know whatever situation you might end up in if you just let your property completely get run down to the point where now you have to sell it, and someone's either got to come in there, do the work that's something at a point that's affordable, or you have to have, like you were just talking about, so much equity baked in that's going to cover either the loss that you're taking or what have you. So yeah, man, like I've seen that quite a bit too, where people come to me and they're like, sell my home. You go into it and it's like, like, guys, like this is a $15,000, just not even renovation, just to get it to the point of where it has to be. Luckily, like, I know you have contacts as well, but luckily we have contacts that can go in there for an affordable price and wait till the point of closing to get paid. They can get that house back to a point where it's actually like sellable.
Yeah. Yeah, I mean, that's a good story there too. Like, cause like I said, I don't want it to be a sales pitch of, talking about, oh, you should always buy, not rent or whatever, right? Cause like there is certain circumstances, like if you don't know how long you're going to be here for, and that type of thing, where, or just, you want to have that expense and no other issues, right? It's cause, you can get hit with, large expenses owning a home. There's no question about it. It's not just your mortgage payments you got to make. But I mean, that's a good example there, right? Of someone who lived in the home, beat it up, had to sell at not an opportune time, still walked away with $8,000, right? So if you're talking about walking away with $8,000, as opposed to how many years were they in the house?
3.
So 3 years. So even if they were paying, even at lower rents, right? Even if it's, so $2,000 a month right now, right? So 36K, so 36K plus 8K. Yeah. So they're basically 44, yeah, 44 K, yeah, 44K.
Math guy.
No, but 44K more in their pocket than they would have if they rented, right? Because if you're spending $2,000 a month for 3 years, that's all out of pocket expenses, 36K plus the extra 8K that they made. So I mean,
60% of their mortgage was interest, but like they had put down a healthy down payment, like 40% of that was equity. So the equity pay down and the fact that probably even the interest they're paying was still less than, like you just mentioned, like $2,000 rent. Truly, if they had just not put so much damage into the property, and we're talking like little holes in the walls and things like that, they would have made probably closer, like much more. You're into 5 figures profit in a short amount of time. Keep in mind, this is after commissions, this is after lawyer fees, this is after everything, and they still did well. Yeah, so they're sitting pretty good in the end.
Yeah. I mean, that's how I see it. I think that like, I look at the market kind of like the stock market. I look at the trends, and like it's very predictable trends that we see every single year in Ottawa, and it has to do with the inventory too, right? And I don't know, I probably said it before, but I'll say it again. I mean, basically, you start off the year with low inventory, right? But everyone starts to look, new year, they're searching for a home, right? Oh, this is the year I buy a home. They start to get in the market. There's not many homes available because all the people who are listing that year, they're waiting till the spring, right? The spring market. The spring market is the best market, but oftentimes people don't realize that the spring market is March, April, May. When other people think they're going to listen in the spring, sometimes they're listing May, June, July, right? And by then they've already missed it. But so when we're looking at it, the year starts off low inventory, nothing. No one's listing their homes in the winter because they think no one's buying. But people start to look, and then all of a sudden, there's 5 buyers for, say, 3 homes on the market, right? And then they start to get in bidding wars and nuts. And then all the homes see the prices coming up, so they start to get listed, right? And then majority of people are buying because they want a summer close, so they're buying in the spring. But then we get it to the point where now it's late spring, And now it's a full flood of new listings. New listings are coming out like crazy because they see that the market is whatever. But a lot of the most ambitious buyers who are panic buying, because there wasn't much inventory, they've already owned homes. And so now for the next 4 months or whatnot, from late spring to summer, we see consistently the same amount of listings hit the market, where everyone's finally got their house ready. Like they thought they were going to list in April, but then they had all this work to do and they didn't get ready till June. So now we have the latecomers to the market, right? And so we still have people, they have the higher sales, so they're still buying based off that, but then slowly demand drops, right? Less and less buyers out there, more and more listings. And then we get to this time of year where we have homes that have been sitting since late spring and summer, and all the homes that are listing now, with every week a little less buyers buying, right? And so now we have typically the most amount of inventory that we have for the year. And then this is where people start to, if they need to sell, they got to take what the options are on the table, right? And that's when you start to see prices come down. But then what happens in the next little bit is a lot of these people don't need to sell, and they cancel their listing or they put it for rent because the rent market's so good. And then by the end of the year, everyone starts to cancel their listing. And then we start off the new year with no homes on the market, right? And that's kind of how I've seen it happen pretty consistently since I've been doing real estate.
There's also, obviously the rates having a huge effect. So you have a lot of buyers that are waiting for those rate drops too, right? Like, I think there's been a lot of people, you touched on it earlier, like Ottawa's incredibly conservative. I think there's a lot of people that can buy a lot more than people think that have been kind of waiting. So they're waiting for a rate announcement or whatever. There's some people that do get lucky with a buy in the right window, and there's some people that get hit. I think there are obvious ebbs and flows like what you're talking about. As you're saying it, I was like, yeah, you're bringing me back to all sorts of, yeah, exactly. There's a lot of patterns through the year, but these like rapid rate increases that we experienced over the last 2 years, and then now these rapid rate drops that everyone's talking about, also obviously, and you're not saying that it doesn't, but have a major effect on just general psychology. There's people that are waiting, there's people that are rushing because they think the prices are going to jump. There's always those buyers that just like waiting for a drop. They're waiting for a drop. They're waiting for a crash.
So I mean, but that's the reality, right? Okay, so let's say right now, let's say that 90% of buyers are waiting for the interest rates to come down more, right? At what point though, right? So let's say we have 10% of the buyers on the market, right? And the interest rate comes down a full percent. How many buyers are back on the market, right? We get another 10% more, so we get 20%. You got 80% still on the sidelines. Interest rates come down another full percent.
Another 10.
Right. How many are on the sidelines, right? Because the thing is, there's tons of people that that are never going to get there because it's never going to be in the twos again, right? It's never going to be in the below twos again, right? But what happens? At what point do people say, "Oh, now's my chance," right? And that's what's going to happen is that if everybody is waiting for the rates to drop, what happens when the rates drop? Right? Like we don't all of a sudden have 10 times, or say like not 10 times, but let's say 5 times as many people, right? If we have 10% now and the rate drops, so say we have 5 times as many buyers on the market right now because the rates have dropped. We don't have 5 times as many more homes. So what happens?
Yeah, supply and demand, prices go up.
Yeah. And we just kind of repeat this cycle, right? And yeah, I just don't see where it ends until we can start to get a lot more homes built. And yeah, we find a way to make living more affordable in the country as well, right?
It's interesting how we saw a huge wave in Ottawa, like I think everywhere, including Toronto and Vancouver, other markets that I haven't really focused on as much as Ottawa, of course, but like how there used to be all these condo developments, all these buildings of condos getting erected. Like you look at Toronto, there's a ton of them that are just sitting there, overpriced just because the builder was borrowing construction loans at a higher rate or whatever. And then either those projects now are being flipped into apartment rentals, or all the projects like we're seeing here in Ottawa that were set maybe at one point, because these projects take years and years of planning and raising capital and getting site plan approval, etc. They're flipping into all apartment rentals. I love how it's really interesting how like every tower that's going up, and there's so many here in Ottawa. I've heard there's a ton in Halifax as well, which is not connected, but are rental buildings right now. So we're seeing like a wave effect there too, where it's like that's going to affect supply and demand on the purchasing side as well. So now all these rentals that are coming to the market, meanwhile the rates are dropping, and I agree with you, we're not going to see 2, but what if we see in the 3s? We definitely will. I've heard, it's all speculation, but I've heard the rates, the BOC rate's going to hit 2.5 points by end of 2025. Do we know? Of course not. We don't know really anything. We can see kind of like the themes of where it's going. But when that happens and more buyers can get into the market, what's going to happen to all these apartment rentals that everyone switched to? What's going to happen there? Like there's all these different themes that are coming into play there that are going to affect the supply and demand as well. And I think you really see that in Toronto, where so many condos, right? There's just so many, they built so many condos because the demand was insane.
Yeah. I mean, I heard a stat, I think I'm glad you brought up Toronto and different things, because I heard a stat that there's a new Canadian coming into the country every few minutes, right? And so, and the one caveat I would say to that is how many people are leaving, right? Because you just hear like, okay, there's a new, because I think you were at the same conference as me as when they brought that out. But you know, there's new Canadian landing, and there's a massive percentage of them that are landing in Toronto. But how many from those are then seeing Ottawa as the more affordable option, right? And so we have like higher immigration than we've ever had, really. But how many people are leaving? That's the one question that I haven't had answered, right? Is like, because there's definitely some people that are leaving, right? So what's the answer there? But then when we're looking at, you know, again, affordability, you're asking the question of like, do I see people in Ottawa underwater, right? Well, I think this is a good question for people in Vancouver and people in Toronto, right? Because you got to understand that the average income for someone in Toronto is essentially the same as the average income for someone in Ottawa. But the average house price is, I say 2 times as much, but it's not exactly 2 times as much. But yeah,
something like that, yeah.
You know, so it's 50% more, let's say, right? So if they have the average home being 50% more, the average mortgage payment being 50% more, but the average income, and you know, obviously I do hear things about the condo market having some serious troubles there, but I don't hear of a major foreclosure issue there, right? And the thing is, that's where Ottawa right now, being so much more affordable, so much more of a conservative city, you know, I'm open to the negative and I'm worried about the negative and I want to pay attention to it. But like,
you don't see
I think if you're worried about the negative, then you're going to miss the opportunity in front of you as well, right?
Yeah, if you're worried, people thinking that there's a ton of, it's a really good point. People are thinking there's a ton of foreclosures that are coming. I've talked to a lot of people in the past, like not necessarily people that can even buy, but just there's this like general opinion that's floating around that like, oh, there's all these foreclosures coming, people that are going to lose their shirt, and like, okay, maybe there's slightly more of a chance of that happening in Toronto, maybe in Vancouver, maybe, but we're not really seeing that here in Ottawa, and that was what I was trying to get at. That's what I was asking earlier, is like, how much are you seeing that? Obviously, you and I both have received those phone calls of people that are upside down, but then you expanded on that and said like, it's because they've brought on more debt. They didn't decrease their spending habits while everything was getting more expensive. And I heard actually something that's, I don't know how true this is, but apparently, so this guy did an experiment where he found one of his old shopping carts online at Walmart from 2021. Do you see this? Like $150, and then he did the exact same inventory in the basket today, and it like literally tripled in price.
Yeah, it was American, but yeah.
Oh, it was American. So, and I mean, it's got to be something probably similar here, if not even worse, right? And I think if you're the person that's not decreasing your spending, and you're incurring on, as you said earlier, like more debt, then yeah, those people might be in a position where, as you also touched on, there isn't enough equity, even though everyone's equity jumped, to save them in case they have to remortgage whatever, and then they're upside down. But like, it's very few phone calls for myself that people that actually like, they have to sell because they're upside down. There's people that maybe want to because they're feeling the pinch. Everyone's feeling the pinch though, but they are in a position where maybe they can extend that amortization. Most people are. And they're not necessarily going to end up being upside down and having to sell their house. So I think the people that are waiting for those foreclosures, the people that are waiting for, all these deals to hit the market, yeah, there are some that come. Obviously, we do see them. But what's cool about them too is when you see those deals come out, you'll see like 10, 15 offers. Even now with rates where they are, 10, 15 offers, and those places are selling well over asking.
Well, it's the thing. If you're waiting for them, you're missing them because they're always there, right? They're always there if you're looking, right? So all the people that are sitting back waiting for it, no one's going to come deliver you this amazing opportunity. You got to go out and find it. And they're always there. But if you're not actively looking and you're not, and if you're looking for something that's too good, like this is always what I tell my team and even myself, right? Or my clients, like they say they want a deal. Okay, you want a deal, great. We'll look for a deal. But guess what? A deal means it has to be accepted by the other side, right?
Everyone wants a deal.
So no, but the thing, but if you want a deal, like we can get a deal. We can get something under market value, right? But if you're just going to offer way less than what a home is worth or believe, like that's the thing, it's not about offering way less. It's people believing that homes are worth less than they are, right? If you have that belief that, oh no, that home is not worth that, but all the other homes are worth that, like you'll never get the deal because you'll never get an offer accepted to actually own the home. And how much have you wasted in rent in that time period you wait, right? And like, that's the question is like, yes, maybe we'll see a couple more foreclosures coming, right? But how many people are waiting for it? Like that's always like the craziest thing is that it's like everyone with that mentality has to understand there's a lot more of them where they came from, right? And it's the people who are actually making money, who are getting advantage of people, are the ones who are educating themselves, seeing the market trends, seeing the market value, and taking advantage of circumstance of sale, right? If someone needs to sell in this market and it's a slower market, that's when you get the deal. Right? But thinking that in the slow market, it's always going to get slower. Like this is what happens every year. And I'm going to get excited about it because it's like, it's crazy. Every single year this time right now, I see people, we're getting clients better deals. And we find clients, it's happened 3 years in a row now where we found a client, a deal in November, December, and it's way below what the exact same home sold for in the summer, in the spring. Like it's not even like, it's night and day different, right? And they say, no, I think the market's going to go cheaper. And then the next sale doesn't happen until March, and it's 10% more, 20% more than the offer that they had locked in November, thinking, oh, no, it's just going to keep getting worse. This thing is every time the market goes down, it readjusts itself. And every time the market goes up, it readjusts itself. Because the lower the prices go, the more buyers come back. The higher the prices go, the more buyers back away. And so the market, overall, we have a shortage. It is always self-regulating, and it can only go so low before everybody buys. Mm-hmm. And if you're thinking that the home prices are going to drop 10%, think about it. When they drop 5%, how many more people buy? How many people are back in the market? And that's kind of the biggest educator that I want to see people, because it's like I hate it. Like I have people that I've been talking to since 2019 telling me the home prices are gonna drop, where they would have $200,000 in equity on the average home price back then, which was half.
And these people,
you know what I mean? Like let's think, and it's like now they can't even afford a home, right? Like with the increase, they can't even afford a home anymore. Whereas like they would have, significant equity, significant retirement fund. Always thinking the grass is greener, right? Obviously, you got to do the numbers. You got to make sure you can afford it. You got to make sure that you do due diligence and aren't going to have like a roof issue or a foundation issue that's going to really put you in financial strain. But you run the numbers. There's only one way to gain equity in real estate. It's by owning it, right? It's not by waiting for the right time to buy it and continually being outpriced at the market.
100%. It's a perfect point to something that I'm dealing with right now. We've all dealt with several times. Like I'll never tell my clients no. Like it takes a lot of offers and a lot of heartache for me to step in to my client and say, no, we're not doing that. We're not putting that offer in. I usually will help them to see the market. The market will show them what's going on. Every consumer, including myself, at some point, had to take a chance for myself. I had to learn, not necessarily the hard way, but I had to learn through my own experience, even if the professional is advising me on what not to do or what they should do or whatever. But something that I'm seeing is like there are a lot of deals right now, and there's a lot of properties that are even sitting on the MLS that are actually like they've been sitting there for a while. Maybe there was a couple conditional offers that fell apart and they couldn't they couldn't sell, so they're sitting there stale, and so everyone thinks there's something wrong with that property. Everyone's like, oh, there's something wrong with it. You look at days on market. Everyone's focused on days on market. It's 120 days on market or whatever it is. But you look at the price. It's an end unit townhome in Canada, and it's up for $540,000. And you're looking at other prices of end unit townhomes in that area, and they're selling for $570,000. And you're thinking, what's wrong with the house? What's wrong with the house? Well, here's the thing with the herd mentality that's going on is like there might not be that much wrong with the house. And if there is, have a home inspection. You have the opportunity right now to get a conditional offer in on that. Have a home inspection. If you like the home, put in that offer. So we get to that point with people where they don't want to offer, or the opposite. They come and they're like, well, I can just lowball this person. They go in. This actually happened to me the other day. We went in on this townhouse where it's already pretty much at the bottom. It's actually like market value is higher than what it is. Even after seeing it, I'm like, yeah, there's a couple of things that need to be fixed, but the house isn't really that bad. And we go, and the client's like, well, because it's been sitting here so long and the place needs to be painted, let's go $35,000 in under asking, which is essentially like close to 8% below asking price. And I'm like, are you sure you want to do that? It could send the wrong message in terms of psychology to the seller. You might upset them. Keep in mind, this seller's had 2 offers or 3 offers or something fall apart over the last 4 months. This is going to be tiring to them and emotional, and you probably could get this house at still a decent deal without upsetting them if you just go a little bit under asking. And sure enough, we went in that $35,000 under, because I don't say no to my clients. I try and allow the market to show them what's going on. Guess what happened with the seller? The seller decided to not even counter, canceled the listing, and took it off the market. Yeah. So my point of what I'm saying is like sometimes there is an actual deal right in front of you that's in the market, and you're saying it's not worth that, it's not worth that. It's not about what you think or what you want to pay for it. It's what the market value of that property is, and that's all that matters. And sometimes there are deals that are in plain sight, and it's just because everyone thinks there's something wrong with that property that it's just been sitting there for a while. So it is an opportunity for you. It might be a deal, but don't go in and then try to additionally, we've already looked at comparables and it's, whatever, 20% less than it should be or whatever, not that much, but 10 to 8% less than it should be, and try to lowball them even more just to try and get a deal with, would you have been happy at getting this place at asking price? Well, yeah. Well, then why not put in something that's a little bit reasonable? Try to save yourself that $5,000 off I'm not saying don't try and get a little bit off, but would this tick, 7, 8, 9 of the 10 boxes for your criteria as a buyer? Yes. And you're not paying rent at $2,200 a month anymore? Oh, okay. Get into this, because as we've been discussing most of this podcast, like as those rates come down, the prices are probably going to jump up, and you're going to be that person that's caught 15 offers in on houses as they're incrementally going up in value 100%. And keep losing out.
100%. Chasing the market as a buyer when it's going up, it's not a good look, and chasing the market as a seller going down, it's just tough. People have to be educated on the market and see what's coming, follow the trends, right? But yeah,
it's like we have 4 minutes left here. I've literally talked to you all day about this, bro.
Yeah, I've been holding P for a while, so
yeah.
I think let's call it.
That was fantastic, man. Thanks for having me on, and let's do this again soon.
100%. This is great. Thanks.